Welcome back to Real Clear Radio Hour, brought to you by the Competitive Enterprise Institute. I'm your host, Bill Frezza. Coming to you from the convention floor of Freedom Fest in Las Vegas, we're pleased to welcome global analyst Adrian Day, Chairman and CEO of Adrian Day Asset Management. Adrian, welcome to the show.
Well, thank you for having me.
Adrian, there's been a lot in the financial news lately. No one knows what's happening next in Greece. The Chinese stock market is in turmoil. It looks like Puerto Rico is about to throw in the towel. Is the great crash we've all been waiting for finally coming?
That's a good question. You know, I was actually writing an article a few days ago, and that's pretty much the subject that I started with. The problem is that we have fundamental issues in the world. So what's happening in Greece is a reflection of that. What's happening in China is a reflection of that. But we have a fundamental problem in the world, and I think at some point it is going to come home to hit us. And the problem is we have just too much debt. We have too many unfunded obligations. Too many promises have been made. And this is true pretty much around
Everywhere.
the world.
It's been papered over by central banks with all their money creation, but how long can they keep that up?
That's the whole point. And so are we heading for a crash now? You know, the crash, maybe we are, maybe we're not, maybe we'll escape it again. But I tell you, fundamentally, we're building up these problems, and the problems are getting bigger and bigger and bigger. And, you know, to me, debt is behind everything. It's certainly behind the Greek situation. The plain fact is there is no way, no how, as they say in America, can Greece pay its debts in full. Not in the next 10 years, not in the next 100 years. It just cannot happen.
And everybody understands that.
And so why do we continue to give them more money just to continue to service the debts? It just doesn't make sense.
Because they don't want to write them off. You know, one man's debt is another man's asset.
Of course.
And those assets get pyramided in our banking system. And if you have to admit that the underlying asset is no good, you've got a problem.
Exactly. We're afraid of facing the reality. And of course, in Europe, you've got the added dimension that the Germans in particular, until very recently, have been truly fearful, or they really don't want to in any way admit that the euro was an error.
Yeah.
And of course this all goes back to the war, and you know there's still feelings of some guilt and so on. So it all goes back to that. But the more practical thing of just not facing up to reality is existing everywhere around the world.
So what's an investor to do? How do you protect your assets for a crash that may come, may not come, may come years from now? Where's the best place to hide?
I wouldn't quite put the question that way, if I may. I don't think that an investor can live his whole life saying,
hiding in the mattress.
Hiding. Where's the best place to hide? So the way I look at it, the way I advise people, the way I look at it is you divide your assets. You have a certain amount of your assets that are insurance, protection, whatever you want to call it. And that's your ultimate insurance if everything goes wrong. And, you know, obviously physical gold is a major component of that. And it might also be some real estate in certain places, etc., etc. And then pyramid is perhaps the wrong word to use when we're talking about investing, but you have insurance, and then you have a long-term investment sort of
long horizon
core philosophy, depending on your age and circumstances and everything else. And then, you know, if appropriate, you do some more short-term tactical trading. So when the risk level, if you like, they talk a lot now about risk on, risk off. That's the sort of phrase that people are always using all the time, but I think there's a certain amount of sense in that. When the risk level is much higher, as it is now, you obviously want to start being a little more defensive. But it doesn't mean you sell absolutely everything you own. You know, if you bought, for example, if you own a portfolio of really good quality global stocks like Nestle, and you bought them 5 or 10 years ago, and they pay dividends and they grow, you don't just suddenly sell them all because you're nervous about Greece.
No reason to run and hide.
Exactly. So it's a matter of having a program and then sticking with the program. And too many people, unfortunately, and we're all prone to this to some extent or another, but too many people react. And so to me, it's a great tragedy when investors sold all their stocks at the end of 2008 because that was clearly, obviously, the wrong time to do it. Now, it gets back to another issue, though, and it gets back to the issue of debt. If you have a well-thought-out plan and you have your insurance, right, you have your insurance, and you're not buying things on margin, if you have a Nestle that goes from 65 to 35, it doesn't really matter because you're not on margin, you don't have to sell it,
Right.
You've still
You
got
can
your
ride it out.
insurance, you ride it out. The people who get into trouble are the people who overextend, and I see that all the time.
Oh, sure. Well, that's what's happening in China right now. So much of the stock market play has been margin debt.
Yeah.
So with all the uncertainty in the world, all the volatility and all the risk, why isn't the price of gold soaring?
That's a good question, and obviously there's no easy answer to that, but I think there's a couple of things we can say. One thing is that gold typically reacts when there's a black swan. I don't think anybody anywhere can say that they didn't see Greece coming. And so, in a way, it's not really a surprise that gold has not reacted stronger to the Greece situation. Yeah, I think so. And there are still some fundamental negatives for gold, primarily the dollar, of course. The dollar is strong. When the dollar is strong, gold is typically not.
But the dollar is strong only in relation to all the other currencies.
Of course. I mean, fundamentally, I think one of the big stories of the next 20 years will be the collapse of the dollar. Fundamentally, the dollar is very overvalued. And it's overvalued, frankly, even against the euro and the British pound, but it's particularly overvalued by as much as 25 to 35% against most of the Asian currencies. This isn't just me. The Economist runs tables, the IMF runs tables. Anyone you look at when you're looking at purchasing power or whatever, the dollar is grossly overvalued. That's going to happen at some point.
So, Adrian, let's get back to gold for a moment. What's the difference between holding physical gold, coins and gold bars in your safe at home, versus having some sort of claim on gold, which is in a warehouse somewhere that you don't get to see it and you don't know who else might have claims on that same gold?
Well, I think that's what's called a leading question, which you've really answered. To me, an awful lot depends on exactly why you're owning the gold. If you have gold as an insurance against catastrophe,
right,
you want that in your own grubby hands. Now, there's a cost to having it in your own hands, in a vault in your home. There's a cost to that, but that's what you want. Now, if you're trading gold, you think that gold hasn't reacted much to China. China's getting so much. Yeah, you can buy an ETF, you can, and of course you can buy gold stocks. That's a different issue altogether. So I'm not 100% against owning what we'll call paper gold at all times. But it really depends on why you're buying it and what for and what the time frame is.
So it's like a eating herring versus a trading herring, as I used to say.
No, absolutely. And I do think, to be honest, I'm not as negative on some of the ETFs as some people are. I think if you look at, GLD, who's obviously the biggest one, is taking a lot of flack. But the gold is audited, the gold is, supervised by both HSBC and State Street. There's a level of, yeah, I think so. But even if the gold is there 100%, which I think it is, it's still not physical gold. In a catastrophe, the banks can close, you can't get to your safe deposit box. In a catastrophe, they can stop redemptions of physical
just
gold.
Just about anything.
They can do anything they want. Or the president
can take it, as FDR did.
But if you have your own, that's something different.
So, Adrian, if you look at both the melees in all the markets and the lack of growth, at least in the Western democracies, and you look at the turmoil in the banking sector, to what extent do ill-advised regulations play a role?
Oh, my gosh. I think it's an enormous role, and particularly in the United States, but increasingly in other countries as well. One of the problems is we look at something that went wrong, and so we think, therefore, we need more regulations. But if you start looking at it on an individual business level, in my business, we're a small firm. We have 4 employees. We're a money management firm. The rules that the SEC comes out for registered investment advisors are the same rules for us as they are for BlackRock.
Right.
That in and of itself.
But they're designed to put you out of business, aren't they?
It's funny you say that because I think there is a deliberate plan to move small businesses out of business.
Whether it's deliberate or not, it's happening. And not just in finance, it's happening across the economy.
It's happening in healthcare. When you go to a doctor, half the time he's not paying attention to you. He's making notes on his iPad. Healthcare and finance are probably the two key areas.
But energy, I mean, there's a lot of places where it's very difficult for a small player to surmount the regulatory barriers to entry or operation.
Absolutely, absolutely. And this is a serious problem for America, and it's not just for existing small businesses to overcome the hurdle, it's for new business creation. For the first time, since the statistics were done, for the first time, there are more small businesses closing in America than there are small businesses opening. That is something we should really be
concerned
looking
about.
at, because small business is the driver. That's what drives an economy fundamentally. That's what drives employment growth.
And that's where tomorrow's big businesses come from. Let's not forget that.
Absolutely. And it's because of regulation. I can't tell you how many people I've spoken to in a variety of businesses, people who are successful business people. They've started 2 businesses, 3 businesses, 4 businesses. I was talking to a guy just a few weeks ago. He said, you know what? I think that's the end for me. I mean, I'm young. I could do it again. Just don't want it.
That's why I'm doing this radio show.
Just don't want the hassle.
Well, Adrian, it's been a delight chatting. This has been a wonderful couple of days so far at Freedom Fest. Enjoy the rest of the show, and thanks for coming on.
Well, thank you very much.
That was Adrian Day, CEO of Adrian Day Asset Management, coming to you from Freedom Fest in Las Vegas, here on Real Clear Radio Hour, brought to you by the Competitive Enterprise Institute. I'm your host, Bill Frezza. Real Clear Radio Hour is produced in conjunction with Real Clear Politics, America's premier independent political website. Real Clear Radio Hour is a not-for-profit, donor-supported program. If you'd like to help us expand, please stop by realclearradio.org and hit the donate button or contact us to become a corporate supporter. That wraps up our show for this week. We'd like to give a shout-out to our newest listeners on 1590 WSMN Nashua, New Hampshire, and 1450 KBOW in Riverton, Wyoming. Please join us next week, same time, same station. See you then.